The Fidelity US Quality Income UCITS ETF, ticker symbol FUSD. The fund invests in companies from the USA with certain quality characteristics, which we'll see in a bit. It is domiciled in Ireland and is UCITS compliant, which makes it available for European investors as well. It tracks the index by Fidelity, carrying the same name. This index, with everything I will show you in it, is the reason this is one of the best ETFs I have come across in all the years I've been investing. It's really a masterpiece what Fidelity have managed to create, so let's dive into it. The main screeners are income and quality ones. The income screener makes sure that only companies that pay dividends are included in the fund. This is a major difference with the S&P 500, where there is no requirement for a company to pay a dividend, which brings the total dividend yield down. But more on that later. Then we get to the meat of the index. What happens next is pure magic. Magic. See what I did there? The three screeners are quality-oriented ones. All companies that are selected initially are then ranked according to a score that is calculated based on these screeners. Each of them have equal weighting, which means that 1/3 of the quality score is calculated based on each. The first one is cash flow margin. This is a metric that shows how profitable and efficient a company is. Think about it this way. If a company makes $1 billion in sales of a certain product, but only has $100 million left after paying for everything they need in order to sustain the business, it is less profitable and efficient than a company that keeps $300 million from the same $1 billion. The second company will be ranked higher for this current screener. This ensures the companies in the ETF are profitable and efficient ones. The second filter also measures how profitable and efficient a company is. It is return on invested capital, or ROIC. It basically, to simplify it, calculates how well a company uses what they have as assets and money to generate profit. The bigger the percentage is, the more efficient the company is. It shows good management and higher potential for future growth, since there is more money left as profit generated per unit of capital. And the last of the quality screeners is free cash flow stability. This measures how consistent the company is in generating money, and so is an important metric for only choosing stable and strong companies. It is calculated over the past 5 years. Now, these three metrics are enough to ensure high level of quality for all the companies in the fund, and if there were no more filters, it would still be a pretty good ETF. But there's more. The following metrics are also included in the calculation of each score a company gets. First, price momentum, which gives the company a higher score if it has more momentum in the returns in the past year. Second, dividend payout ratio, which is the percentage of the profit the company pays as a dividend. It shows the sustainability of the dividend. Then it calculates a score for the dividend growth in the past 5 years. And lastly, for the dividend yield, which is a percentage the dividend is of the stock price. Now, with everything said this far, you can see how only very high quality companies will be present in the ETF. But as if it wasn't enough, there is more. Only companies that have grown or sustained their dividend at the same level for the past 5 years are allowed in the fund, which ensures that no dividend cutters will be allowed to creep into your portfolio. Then, the top 5% of companies in each sector with the highest dividend payout ratio are removed. This ensures even bigger sustainability of the dividends. If you're getting overwhelmed, don't worry, we are approaching the end. Please keep up with me here, as there are so many quality filters in the ETF, I wanted to show them all to you. Next, the 5% of stocks with the lowest momentum in their returns for the past 12 months are also removed. And lastly, companies that stop paying dividends from the ones which are already in are removed almost immediately, which is every month. A lot of ETFs wait for months and even a whole year to do that, dragging down the total returns, but FUSD does it every single month. I mean, just look at everything we went through. This Fidelity index makes sure only top quality companies go into the ETF by having so many checks and filters. Now, compare that to an index like the S&P 500, which basically has one filter. If the stock is big enough, it's in. Don't know about you, but I feel way more comfortable with an algorithm that calculates all the metrics we discussed constantly, keeping my ETF clean of lower quality companies, than simply a basket of stocks which are big enough to get into an index. For that reason, and because of all those quality screeners, which I haven't seen anywhere else, I have included FUSD as one of the ETFs in my top 4 stocks and ETFs free report, which you can get by going to the link in the description. It is a free report that will be sent directly to your email address. Now, have in mind that the report will always be up to date with the current environment because I'm constantly updating it, and since I have no idea when you will be watching this video, FUSD might have been removed by me. But at the moment of making and uploading this, it is there. And since the first time I included it in the report about 6 months ago, the ETF is up 14.85%. Of course, this doesn't guarantee future returns, and I'm not telling this to brag, but just saying that for a 6-month period, it's a pretty good result and confirms my choice to include it. So again, go to the link in the description and grab your other 3 stocks. If you want to know how FUSD compares to the S&P 500, click on the video on your screen for the full comparison.